So thank you folks for joining. Thank you, Alex, for taking the time to educate our audience. I am Mr. AK, as you guys know, from Entrepreneur Extraordinaire. And those of you who subscribe to my channel know where to find me. Alex, we're going to share his URL and link to his TikTok account, and I'll share my screen to show you guys. But Alex is one of those guys who is extremely helpful, extremely willing to go the extra mile to review your credit report, answer your credit questions. He even has a course. He's been doing this for a long time. He's not someone who just talk the talk. He also walks the walk. And that he also owns several exclusive credit cards that he's going to share with us. So with that, I'm going to introduce my friend Ryan Alexander. Ryan, go ahead, please introduce yourself.
Yeah, so AK, thanks for the introduction, man. Yeah, I mean, I'm extremely happy to be on here because credit's like one of those weird things. It's just like finances. People don't like to talk about it. People think it's this like crazy unsolved mystery with some, unsolvable algorithm. And it's really simple when you just take a little bit of time. And what I always say in my program, in less than 2 hours, I can teach you how the credit algorithm works. It just takes anywhere from 6 to 12 months to fully implement what I teach you to properly build and structure an 800 credit profile. The big word out there is credit repair. I don't do that. I don't like that. I think it's the second biggest scam next to college education. What I do think is though, is you take specialized education and you implement it in very small increments, which makes it easier to absorb and it makes it much easier to implement it. People then can change their lives is what I call the 7-day credit cycle. So I'm happy to be here. Guys, please ask questions, not be afraid. There's no bad question. There's no stupid question.
Yes, so Alex, can you shed some more light when you said the word, 7 steps or 7 days of credit? What does that mean?
So a 7-day credit cycle. So I'm going to kind of jump right into this. One of the biggest traps with regards to credit cards, right? So credit cards are like the easiest thing that people get into trouble with because as college kids, they hand them out like lollipops from college campuses and they don't teach you how they work. And when I first got a credit card, it's Ryan Alexander, and I thought I was some big guy. I got a $500 credit limit, not thinking and realizing it's not a gift card. It's a credit card. When you understand the fundamentals of what credit is borrowed money. And what most people do when they get in trouble is they borrow money for 30 days, and then their payment is due 3 weeks later. And then all of a sudden they see this big payment due, and they're like, oh, well, I can't pay that whole thing. Let me pay this amount.
Yeah.
When at the end of the day, whatever your statement cycle is, which is a 30-day statement cycle, if you pay anything less than that, you pay it. That's how you become an ATM machine for banks and local credit unions. What I teach people is you take your credit cards and pay them every 7 days to zero. You'll never get into trouble. You'll never miss a payment. You'll never pay a penny of interest, and you'll build a nice high credit score with nice high credit limits. And that's why I use a 7-day credit cycle, because it's much easier to manage than it is over 30, 45 days.
That's awesome. So let's roll back a little bit because I have a list of questions that I prepared. And these are just the basics, the fundamentals, and we'll do advanced topic as well at some other point. But for today's sake, let's start with the basic, like what is a credit score for people who don't understand what this 3-digit number means and how do we educate them?
Sure. So a credit score is this. It's a 3-digit number that indicates 2 things. Number 1, your payment history, and number 2, your risk factor. Well, how likely, if I were to lend you money, what are the odds that you're going to pay me back on time and or that you're going to possibly miss payments or take a long time to pay those payments? Like when I talk to my clients and I'll say, if I were to come to you and borrow $100, would you rather me pay it back in 1 week or in 4 weeks? Okay, what would you say?
I'd rather be paying in 1 week, but most people don't pay it in 1 week is what I meant. Yeah.
Right. That's the point. Most people do it over 4 weeks, and that's what I don't want. I want people to get into the habit. When you use a debit card, how quickly does that money come out of your account? Same day, right?
Same day,
The difference is you have to pay that money back. And what happens is people overextend themselves, and that is why I always tell people a credit number is simply a number that says, how likely are you going to pay me back if I were to lend you money? And if you just implement that on a simple daily basis, it becomes so much easier to manage.
Excellent. Let's say if I want to practice all the things that we talked about, how do I get a good credit score? What is a good credit score?
Sure. So the credit score ranges from 300 to 850, but the average scoring models for a FICO score, they go from 300 to 850. And basically anything below 600 is bad. So if you're anywhere below 600, that is considered bad credit. From 6 to like 680, maybe 700, they would call that average credit or okay credit. When you hit 700, that's when you get into the actual good credit scoring model. And then anything over 760, That's what you would call excellent credit. Now, some models you may see they go to 750, some models they may go to 780. I can tell you this right now, if you get an 800 credit score, it's simply for bragging rights because it doesn't help your loan interest rates or your insurance rates or anything like that.
And also it's good to know what you just mentioned, that what is a bad credit score. So anything below 600 is a bad credit score. And I can vouch from my standpoint because, when I had bad credit, which was many years ago, I could tell you that it was harder to get loans for my real estate investing gigs. It was harder to, even have any credibility with the investors because they always look for, your payment history and so on and so forth. And it wasn't so much that I wasn't paying on time and so on and so forth, but I wasn't aware like the timing of the payments, and I wasn't aware that if I carry a balance over, it's going to count against me and vice versa. So it took me a while to figure out, okay, I'm paying payments on time and everything else, but why is my credit score not climbing? So I'm just relating to what you just said. So if I'm some, young gun and I want to start sooner than later, at what age can I start building a credit score?
So this is what I would say with regards to, and I do speak quickly, that's just how my brain works, but I'll slow it down. So with regards to credit, technically you can't start building credit or get a credit card until you reach the age of 18. But a way you can jumpstart that so that when you turn the age of 18, your wheels are already turning, what you can do is have your parents, who obviously properly manage their own credit profiles, or maybe you have an uncle or an aunt, or you have some sort of relative that can help you. And what they do is they establish some credit cards that are preferably no annual fee credit cards that they keep open forever, that have nice low balances, that they can add you on as what's called an authorized user. Now, that does not mean they have to give you a card. That basically just means they add you. So let's conceptually say I have kids, I have nephews. I add that on at the age of anywhere between 13, which most commonly it's 13, from 13 to 15. If I add them on, what happens is they basically adopt my credit history. So when they turn 18, instead of looking like a brand new, person to the world of credit, they actually have anywhere between 3 to 5 years of history. So you can help your kids starting at the age of 13 to 15. Once they turn 18, that all triggers. So instead of them having to wait 6 months to get a FICO score, somewhere between 2 to 4 months, they'll have their FICO score. And assuming you have good low utilization on that card, you're immediately giving them a 700 credit score, which is fantastic.
That is really wonderful tips, Ryan. So let's say if I do reach that level that I have 700 plus credit, so what are the benefits of having a good credit? Can you shed some light on that?
Yeah, so I always say having good credit unlocks and opens doors of opportunities for people, right? So think about if you don't have good credit, you can't get a car, so you can't drive to work. You can't get an apartment, so you can't escape the parents' house. You can't buy your own house, you can't start your own business, and you can't get credit cards that enable you to travel the world for free. And if you do get approved for an auto loan or a mortgage loan or anything else along those lines, by having bad credit, your interest rate is significantly higher. What does that mean? That means you're paying a lot more for the same product versus somebody who has an excellent credit score. Or in your case with real estate, by having a lower credit score, it lowers your approval odds for how much you actually qualify for. So for example, if you have good credit, you may qualify for a $2,500 it's not, the payment may be the same, but conceptually you would qualify, like, let's say instead of the $250,000 house, you may qualify for a $300,000 house. All because your credit score gives you a lower interest rate, which will by default lower your monthly payment. Does that make sense?
Yeah, absolutely. Actually, I have to tell you this. My friend Jeffrey sent me an article that came in New York Post, I believe, and the article title was The Higher Cost of Low Credit. And that's really what you're saying, that the lower the credit, the higher the cost of borrowing, the higher the cost of living your lifestyle that you want to live, and not having any savings because your savings are going towards the interest you're paying towards a credit card. So what is a bad credit and what does it do? What are the repercussions for bad credit?
Sure. So one of the worst experiences in my life. Let me give a little bit of backstory for everybody who's watching right now. I had bad credit, okay? I lost my shirt twice in life on business ventures, once when I was 22, 23 years old, and then once again when I hit 30. And so by having bad credit, I couldn't get approved for a single credit card for like 5 years. I couldn't get approved for a car. If I did, I needed a co-signer. I definitely couldn't get approved for a mortgage, and I couldn't get approved for my own apartment. So humbly, I had to live with friends. And, like you hear those stories about people living on couches. I mean, I was living in my buddy's basement. In fact, at one point in time in my life, I lived in an office. I slept on an air mattress, on an air mattress in the office floor for 1 full year. And that's a true story. Like, my best friends know that's all true and real. And the funny part is, that was one of the worst moments of my life. Like, talk about being humble.
Yeah.
But that's what happens when you have bad credit. Now, there's one thing to have bad credit because you crashed and burned taking a business venture. Maybe you went through a divorce. Maybe you got sick, had cancer or COVID or who knows what. But there's another difference between you just being irresponsible and you're purposely putting yourself into a bad position or situation.
Mm-hmm.
That's where, you want to be careful. But, the cost of having bad credit is less opportunity and more expensive of anything you go to do or buy or have, because interest rates will absolutely crush it. That's one of the worst things. And it's morally embarrassing. I mean, it's embarrassing to not be able to qualify for anything.
Absolutely. I mean, imagine you walk into a car dealership and they turn you down based on your credit because you haven't made the payments or vice versa. Now, there's a question in the chat, and the question is, what are some good tips for my son to get his first credit card? What should he do?
So, Hassan, that's a great question. What I would look at and suggest is 2 things. Number one, and again, everybody's situation is different. There's a huge difference between lack of credit and bad credit. If your son's young and his lack of credit, if he's between the age of 18 and say 22 and he's in school, one of the best things he can do is go to discover.com. They offer a credit card called the Discover It Student Credit Card. It's a phenomenal credit card that enables kids to start with like a $500 card, a very small limit. I've seen kids up to $1,500, but that depends typically on if they have any established credit or not. You could also go to Capital One. Now, the cool thing about Discover and Capital One, Discover Student Credit Card. If you go to Capital One or Discover, if you go to the top and select credit cards, and then you see what you pre-qualify for or check now, do not apply now, you can actually check to see what you qualify for without incurring an inquiry. And the coolest part about that is if you get denied, it doesn't hurt you. Or if they tell you, hey, we won't offer you anything right now, you don't have to worry about that lowering your already low score, because inquiries do impact your score. They're not big impact, but they do impact your score. So that's why I highly recommend people go to those types of sites just to at least see, hey, what am I potentially qualified for? So from a kid's standpoint, they don't have to go completely blind into this and applying, because the worst thing you could do is start applying for credit cards, get denied, and keep applying for more and more credit. The worst thing you can do is to continue to apply when you get denied. When you get denied, stop applying and start learning and figure out what's wrong with your credit profile. And that's what I would tell my kids. Start with student credit cards. If they don't offer anything, go get a secure credit, or again, through their local bank, through their local credit union, or maybe even, again, through a Discover or a Capital One company.
Well, that's good to know. So let me ask you, what is a secure credit card? Because you mentioned that you can also do a secure credit card. What is that? Can you elaborate more?
So a secure credit card is basically going to be a prepaid credit card. Now, this is really important. What I want to mention here, you're welcome, Hassani. What I want to mention here is this. With a secure credit card, some people think, I'm going to put as much on the secure card as possible. You don't need to. What's really important, I always tell everybody, is you don't need to put more than $200 or $300 in the secure credit card. And here's why. It's not the actual credit limit that makes your score. It's the reporting date balance that actually makes up your credit score. So whether you have a $3,000 limit or a $300 limit, it's all about the utilization. Now, what is credit card utilization? Credit card utilization is the second most important factor of your credit, okay? First is payment history, then it is credit card utilization, and then number 3 is age of history. Credit card utilization is this. Let's say conceptually you have a $1,000 credit limit. Your credit card utilization is, of that $1,000, how much are you using? What you ideally want to do is you want to make sure that you're using, on the reporting date, nothing more than 3 to 9%, okay? Ideally. Now, that doesn't mean you can only use 3% of your credit card. You can max your credit card out every single week. The reality is, it's making sure you pay your balance to zero, and on that one reporting date, making sure that your balance is no more than 3 to 9%.
3 to 9%. Okay, that's the magic number, folks. 3 to 9% is what you want to shoot for. Obviously, we're not perfect, so sometimes it might go up or down. There's also another question from Norman. What is the best way to improve your credit score? No better. Okay.
Sure. So the best way to improve your credit score, and this is making it on the simplest level, and that is get used to what I said at the beginning of the video, is get used to a 7-day credit cycle. Every 7 days, if you've been around a while and you've had some established accounts, you can do it every 14 days. But if you pay your credit cards off every 2 weeks, starting 2 days before the reporting date, and then 2 weeks later, again, you'll never miss a payment. You'll never pay a penny of interest. Your debt will never run away from you. By paying your cards and keeping your balances nice and low, your risk factor is also nice and low. That's going to do two things. That's going to more quickly increase your credit limits, and all these habits are going to more quickly increase your credit score. Why? Because your risk factor is significantly lower. Does that make sense?
Yeah, absolutely. Wonderful points, Brian. And I was going to ask you the same thing. What are the top 3 things you suggest to improve your credit? I think you touched upon some of them. Is there anything else you want to add?
Yeah, I'll tell you the top 3 things that I would do. I mean, the first is obviously getting a job and setting a budget. Figure out how much money you make, okay? And then break down how much your expenses are per month. Now, you're going to have rent, you're going to have your utilities, you're going to have your car, you're going to have your insurance, and then you're going to have your food, gas, whatever, okay? Then you want to figure out what are your non-essentials, okay? It's going to be, okay, do you eat out a whole lot, right? Do you drink? Do you go to the movies a lot? Do you like to party and hit happy hour? You want to figure out what your actual expenses are, making sure that you're breaking them down and understanding exactly what you bring in and exactly on average what you spend, okay? So setting a budget is the first thing. The second thing is making sure that you're downloading credit monitoring apps and or tools. Now, for everybody that's listening, you want to write these down. You're going to write down things like Credit Karma, Credit Sesame, Nerd Wallet, Wallet Hub, Credit.com, Experian, and if my friend Brian Carter's still on here, Mint, M-I-N-T, which is by Intuit, which is now the same company that bought out Credit Karma. Mint is way more of like a overall budgeting tool where you can put your finances, you can put your account balances, your investment balances, your mortgage balances. Mint is a fantastic tool, but by using all those other apps, you have a firm idea as to what's happening with your credit profile and exactly what you need to do to better, manage your profile and manage your credit score.
Yes.
Last one I tell you is pay your things off every single week, but we already touched on that a bunch of times.
Yeah, folks. So I think these tools that we just posted, Credit Sesame, Nerd Wallet, and I personally use Mint myself because it shows you the full breakdown of your expenses and spendings. It's very helpful, and I know that we all can't just go in every day and look at this stuff, right? But make it a habit as much as possible every month or every other month. Go and have a look at your spending habits, have a look at your credit cards, and so on and so forth. Another question I guess we have is that can you list some benefits of having multiple credit cards? So not just one, but many, and then how many? I guess if you also want to tell us that.
Okay, so here's a fun prime example. So let's conceptually say, and this happens to a lot of people, let's say you have one credit card. Now, I know people that have one credit card. The reason I'm specifically holding up this Chase card is because many of the times I have heard, now when I say many of times, it's probably not even 5%, but I know several people that have had their card shut down, their accounts closed, kaput, done, ran it for no reason, because maybe somehow there was something that the bank didn't feel comfortable with, so they shut down your account. Well, guess what? If you have a 750 or an 800 credit score and only one credit card, and they close that thing down, your score could drop to 650 or lower. Guess what that means? That means your interest rates are going to go up. That means your insurance rate. I don't think people even realize how much your credit score impacts your insurance rates. And your approval odds for anything else diminish. So what do I recommend? I recommend people diversify. You may have a card like a Chase Sapphire card. You may have a card like a Discover It credit card. You may have an American Express Gold card. These are all great cards to have on a daily, regular basis so that you can build credit, manage credit, and diversify your credit card portfolio.
That's pretty dope.
Plus, when you think about this, with the exception of the American Express charge cards, which this is a charge card, okay? This, well, let me pull up something else. And again, this is where it gets funny and interesting. These are American Express credit cards. When you see these cards, okay, these are credit cards. When you see these cards, these are charge cards. The charge cards, they have this same Centurion look to them, okay? The credit cards, they're all different, okay? They're gonna have all different kinds of styles to them, okay? This is a phenomenal starter card, which is the American Express Everyday Preferred card. This card gives you anywhere from 1% to 4.5% back, 4.5% on groceries, 3% on gas, 1.5% on everything else. This card is the Blue Cash Preferred card. This card gives you 6% cash back. This is points. This is cash back. And 3% cash back at gas stations. So if you're looking at making purchases, this is why you should never use a debit card. If you're using a credit card, not only do you get fraud liability protection, so that if somebody skims the numbers on these cards, you're not responsible for it. If it happens to your debit card, that money comes out of your account and you have to prove it wasn't you. With a credit card, they simply deny the transaction, assuming you catch it relatively early, and then they close the card. They keep the account open so you don't lose your credit history, but they just issue you new cards. And that's why it's a good idea to diversify and have multiple cards. How many cards? I have 23 cards. I know people that have 200 credit cards. When people say, how many credit cards should I have? The answer to that question is always as many cards as you can properly manage without missing a payment or without overextending your debt on those cards. Does that make sense?
Yeah, absolutely. Good, really good stuff. And thanks for showing your credit card as well, so people can see what are some of the best credit cards to get. Obviously, you guys saw the Ee&x Business Gold card, the Chase Sapphire card. All those are great cards to have. Premier cards, I would call them. Now, Bridget has a question. Is it better for your credit to pay off a car loan quickly or just pay on time? What do you recommend?
Is it better if you pay first car loan quickly or just pay on time? Okay, so that's an interesting question, Bridget. And here's what I'm going to tell you. The first thing is this. Every time you have an additional open active trade line, that's going to build and boost your score or keep your score higher because you have more active monthly payments. On the flip side to that, if you pay that thing off, you would think you would be rewarded on your credit score. The exact opposite happens. When you pay off a credit card, your score will actually drop. Why? It's one less open active account. That's reporting. Plus, according to the algorithm, it's a closed account. Even if it was paid in full, it's a closed account. That will cause your score to drop. It's almost just like the casino, guys. The credit algorithm is almost designed for you to lose. Yeah. When you understand the rules, it becomes easier for you to play and win.
Yeah, and I think the companies who designed the system, obviously the system is somewhat rigged, but the system is designed to make you carry over your balances so then they can get interest and they can make money. It's almost like a loan and they're making interest and payments.
Right, but I want to stress this. Many people think you're paying interest automatically by using a credit card. As long as you pay your statement cycle balance in full. For example, from the 1st to the 30th, you spend money. On the 1st of the next month, they're going to say, hey, in the month of July, you spent this much money. 3 weeks later into August, you have to make your monthly payment. Now, they're going to tell you to make a minimum monthly payment. You should never make a minimum monthly payment ever. Whatever that statement balance was, you pay that balance in full. Any amount less than that, you will pay interest on the entire statement balance. So what many people don't know is, let's say, for example, you spend $1,000. If you paid $950 off and you left a $50 balance, you're going to pay interest on $1,000, not the $50 left over.
Wow, yeah. So it's critical to pay on time, end of the month or at your cycle, whenever that starts or ends, and then keep up with those payments on a monthly basis. I guess one thing I also like that you mentioned, Ryan, is that when you charge through a debit card, for example. I mean, let's say you have $50,000 savings, in your debit card, in a debit account, and somebody gets a hold of that, they can have access to all that capital you're saving, right? So there's some security risk also for using a debit card, and a lot of people that I know still carry debit cards, and I tell them that it's a security risk. You'll never get your money back, and it will be too much work to even get it back. But on the credit card side, like you mentioned, if somebody steals your money or charge your credit card, you can always claim fraud and get rid of that amount.
I have a simple story to go with that. Long story short, somebody years ago, I got a phone call from TD Bank, which is who I did my banking with then. And they called me and they said, we think you have fraudulent charges. And I said, what is it? Of course, I jumped right into my app and I saw $750 worth of airline tickets bought. And they said, you didn't make these purchases. And I said, no. They said, well, we noticed that it was 3 different charges from 3 different parts of the United States. And I laughed and I said, well, where am I flying to? Well, the lady started cracking up. And she's like, I guess you really didn't buy it. And I said, well, no, if I'm going someplace fun, I'd tell you. I said, but I didn't buy them. It took me 2 months to get my money back.
Wow.
Now, for some people, $750 may make or break their budget for the end of the week or the end of the month. With a credit card, I literally had a charge. I woke up, saw the charge. I said, that's not me. I called Ee&x. It was actually on my gold card, coincidentally. American Express, I called them up. As I was on the phone with them, another charge came in on the phone for Sears.com. And I said, oh, that's definitely not me either. She goes, what? I said, there's a charge for Sears. It just, because I get an alert on my watch. Every single time there's a charge, I get an automatic immediate alert. As soon as it came in, I said, nope, that charge isn't me. And she goes, okay, we'll cancel the card immediately. They canceled the card immediately. Within 24 to 48 hours, I had a brand new card delivered to my doorstep.
That's awesome. Now, I'm going to ask you this because from personal experience, I can tell you that there are some credit cards or vendors like Ee&x and maybe others that have a card that you must pay the entire balance at the end of the month. But then some allow you to carry over. Should you have one over the other, or it doesn't really matter as long as you're paying on time or paying the minimum amount, I guess?
So that depends. If you want to be on my good graces as one of my good students, you never, ever don't pay your credit card statement balance in full. Now, theoretically, and this is one of the reasons why I'm a huge American Express proponent, theoretically, when you compare, let's just say Discover and American Express, okay? Theoretically, the American Express charge cards, when they came out, they were designed, whatever you spent, you paid that month in full. So if I spent $1,000, I paid $1,000, okay? If I spent $10,000, I paid $10,000. Recently, American Express has they've implemented what they call a pay over time, where they let you make a payment over 3 months. Traditional credit cards, like these here, what happens is, let's say, right, so this is Discover, this is Chase Sapphire, and this is my Amazon card. These cards, you may spend $1,000 and they'll say, hey, make a minimum monthly payment of $35. Well, what does that mean? That means you're paying interest. So the answer to your question is, you should always pay, no matter whether it's this card or this card, you should always be paying your credit card bills in full every single month. The reason people get into trouble is because they wait till the end of the month and they say, oh, geez, I spent a lot more money than what I thought. I can't pay it in full.
Yeah.
That's where the downward snowball effect runs away from you.
Awesome. Thanks for clarifying that. So where can people find you, Ryan? I mean, are you on multiple platforms or one central platform? What's the best way to get in touch with you and learn all these wonderful tricks from you?
Yeah, so what I'll do is I'm going to put a link right here, and I'm assuming that you guys can all tell me if this pops in the chat, but I'm going to do this. But so the best way to find me is typically on TikTok. It's Ryan L. Alexander, and it's I Teach Credit, okay? I do have, for anybody who wants to learn, I do have a program, and actually this week and this week only, it is free. If you go to www.700creditclass.com, 700creditclass.com, it is free access. So everybody and anybody that goes to 700creditclass.com this week, it is free. The reason it's free is because TikTok banned me again, because you're not allowed to say trigger words because they flag you as a scam, because according to their community guidelines, I had 1,700 people on my live that I was teaching, and somehow it got flagged as a scam, even though I wasn't even asking anybody for any money. But that's why I did that. And that's why I'm leaving it free for the rest of this week. But you can go to Instagram, you can go to YouTube, you can go to TikTok, you can go to Facebook. TikTok is where I spend the majority of my time. I do have a lot of content in YouTube, but on my online community, 700creditclass.com, that is the best place to learn, to grow, and to figure out how to manage your own credit.
So unfortunately, we have limited time, so we'll be closing this session. Any last few words you want to, any takeaways you want to recap, Ryan, before we close? this session. And thank you all for joining, by the way.
Yeah, it was great, guys. You guys asked some great questions, and I'm happy to help. Whether you're looking to build credit for yourself, whether you're looking to build business credit, maybe you're trying to get approved for a house, maybe you just want to start learning, maybe you make a lot of money and you had a decent credit, but you want to know what credit cards to get and why you should have them and the benefits to having some of them. I can go through all those benefits. If you don't travel, you do not want to go after cards like this. Say, if you do not travel, these are travel credit cards. If you don't travel, go with cards like this that are going to earn you cash back. The Citi Double Cash card, the Chase Freedom Unlimited card, they're better ways to go. If you do like to travel, invest in Chase, invest in Amex, and just invest in some good, simple credit education, simply starting by paying credit cards off to zero every single week.
Please do share the link of this live stream with your friends and family, anyone who wants to educate on credit. Our next session, we're going to probably dive deeper into more advanced techniques on how to get points from credit cards, how to travel for free with your credit cards, and all other good stuff that you hear the YouTubers talk about, but they don't never give you the details. So Ryan can give you all those secrets and more in the next session.
And one thing real quickly, AK, if you could do me a favor, just put my email in there. Just put my email, info@iteachcredit.com, info@iteachcredit.com. And if you guys have any questions, if you want to send me, in fact, anybody that's a part of this, if you send me an email, I'll even call the first, 1 or 2 people tonight.
I think someone asked the question, how to find me. My handle on TikTok, Insta, and everywhere else is AskAKHow. And that's also my Gmail address, AskAKHow. If you need any help with questions that I can answer and help you educate and have a better financial life, please do reach out to me. I like to help people. My belief is that if you help people, then you grow exponentially. If you don't help people, then you're just being selfish and there's no purpose of life. So thank you, Alex. Ryan. Great seeing you again. And we'll be in touch, guys. Bye for now.
Okay, thank you. Have a great night, guys.
Take care, buddy. Bye.